How do I draw key zones? What indicators are good with RSI? How do I know what price is going to be hit next for Bitcoin? Why do I think 37k is going to happen for Bitcoin? So you guys have been asking some great questions, and today's video we're going to do a Q&A going through all of your questions, but also an overlay, so we will explain them in more details by examples, not just me sitting here and talking, because I want you to take as much value as you can from this video. And we'll be using this as a reference point, so every week or every other week we'll make these Q&A videos. And if you have any deeper questions that you do want an answer to specifically from myself, you may want to know more about the risk management, stop loss, take profit, whatever the question may be, you can use this video, ask in the questions below, and I will answer majority or nearly all of them in the next upcoming videos. What's happening, guys? It's Dan Chung here, aka Champ, a verified 600k trader. So a little bit of introduction. What does that mean? Well, a 600k verified funded trader generally means companies, proprietary trading companies who have allocated investment funds, look for traders like me, because traders are a very small percentile of the world. Being profitable trader is a very small percentile of the world, and they verify your track record. They give you a test amount of money, so like 100k, 50k, and if you can consistently perform to make whatever target or just stay profitable, but at the same time managing risk and having the correct amount of drawdown, they will allocate more and more money to you. Now, alongside with this, we have the 600k funded, we have private equity, and then we also have my own allocated money. So there are the three amount of accounts that I manage. On the 600k side of things, I will be looking to get to 1 to 1.5 mil by the end of the year. So it's not really the fact that I'm 600k funded, it's more the fact that I'm verified, and also had students who have been doing this for 14 years, and a shout out to Anton, who made up to 40k in the last 3 months of last year and is now 780k funded in 2023. So it's crazy what trading can do for your life, hence why I got into it and potentially why you're watching this video anyway. So I just do want to disclaim two things. Number one, none of these videos are financial advice, but number two, trading is one of the hardest things that there is, because it's constant self-development, it's putting your ego aside, and to be honest, it doesn't matter if you're right or wrong in the market. What's most important is you're profitable, you manage your risk, and you are able to be consistent over a period of time. So the $5,000 challenge is actually going to be using on Bybit, so if you guys do want to go and give that a go as well, make sure you check out in the link in the description below. There's up to nearly $40,000 worth of bonuses, so make sure you click on the link in the below. So now that we've got that out of the way, let's get to your questions and go through them and learn and earn and level up. Let's go. So the first question we've got here is, I would love to know exactly how these key levels, prices, ranges are calculated and drawn. Then I went to ask him about the zones or levels, and he said he wants to know about the key levels. Now, a quick little overview. When I define these key levels, I go from a higher time frame. The higher time frames generally respect more over a period of time, and on top of that as well, as you go through the lower time frames, they tend to break a lot more as well, and you have to make your decisions a lot quicker on the lower time frames. So that's the difference between lower and high. When I say low, it's like 15-minute, 10-minute, and when I say high time frame, it's like weekly and daily. So for me, I go from weekly, I do a top-down analysis, I draw my zones on a weekly, then I draw them on the daily, and then on 4 hours is as low as I would go. I sometimes do draw on a 1 hour, but if I draw on the 1 hour, I tend to clean them up on a daily basis, meaning that I'll just delete them after the next day or delete them after its use case. But 4 hours daily and weekly are the main areas I draw my zones. You could draw quite a few zones in a very small amount of time frame, so you need to decide for yourself, right, which ones are more important and which ones are you going to pay attention to, and that is generally found by just looking through experience. Practice makes perfect, and which one is tested more out of the most amount of time. So shout out to you, Jax. So why aren't you talking about 30 to 32, the most obvious tested zone, more times than 37k? And that is a very good question, and actually probably one of the most observed points and a great comment so far. I ended up making a video about this, but this was something that I ended up overlooking, because 30 to 32k was not, it is a key area, and you're absolutely right. I was looking more on the longer time frame. 37k is more the longer time frame lookout, and 14k is the longer term lookout. But you are right, and I mentioned in the recent video, so go check that video out. So we've got a comment here from Ryan Christopher. We'd love to see more vids on how you use each individual indicator and the benefits of using several at the same time to increase the reliability of analysis. A big thing about this is the more you pick, the more confusing it can be. We can have all the indicators in the world, it can confuse us, but you need to find the indicators that work for you. You may have 3, someone may have 5. So the most important thing is to find what works for you. When in terms of reliability and the probability, what's most important is backtesting. Now, backtesting is one of the biggest things when it comes to trading, and that is proof of concept. What you need to do is go back in time, test your concept, test your strategy, to make sure that it is profitable over a period of time there before you can even forward test. Now for me, my indicators, the green and red, is self-made. This is an indicator that I made. My student ended up programming it and coding it, but it is an indicator that I made myself to help me understand the overall trend. That's one indicator. The second indicator is just price action, which you just learn to read the charts, which is what I'm teaching you here on this channel. And then the third one is the moving averages, which is the 100 moving average, which just helps me understand the overall movement, and it helps me with a trading rule, obviously, to buy above and sell below. It's as simple as that. Now you can make trading as simple as you want or as complicated as you want. It is completely up to you. Your videos are great, thank you. I personally have spent years learning to trade, and by that I don't mean I'm good at it. Reason being that despite all my knowledge, I have never been able to actually follow through and the behavioral change. Hence, when people say knowledge is power, I believe they're wrong. Applied knowledge is power. I just want to quickly add to that. Knowledge is potential power, execution is key. I'm finally at the stage where I'm ready to actually focus down on my journey, and these videos are a great refresher, giving me the motivation to achieve my trading goals. As a possible tip for others, I use line charts to find the resistance and support, and that is by Chris Taylor. Yep, it absolutely is. Trading is one of the hardest jobs that there is out there. It took me 4 years, took my student 14 years. I also know a student, it took him 6 months. We all have our path. Your time shall come. Just be patient with it and wait with it. Thanks for your effort on your videos. Here by Alexander March. I want to follow your $5,000 challenge. I got the gist of your video, and I find that I'm struggling with 2 issues. Maybe there's worth a video of me making this. The first issue is, how do you confirm a bounce? I find it difficult to see that with my key zones. And would you say the moment is to draw when the chart is actually leaving the zone? The second question is, how do you handle different time frame charts? Do you look at the weekly trend for the shorter day ones, like daily and then 4 hours for entries? And how do you handle indicators signaling different signals depending on the time frame? So the first question, how do you define the bounce? You have to use a zone that has been tested, that you are comfortable and confident from trading that zone. So for example, if there are 2 zones in direct of each other, it's better off just using one of them, because if you have to, you can confuse yourself and then you'll be regretting it, and you can have all types of different emotions when saying, oh, I wish I took that zone, or I wish I did that. Make a decision, stick to it, win or lose, doesn't matter the outcome, suppress your emotions and become that trader you wish to be. The second one is basically talking about if the time frames conflict within each other. Now if they conflict with each other, the easiest answer is just to wait for all of them to confirm. That gives you the highest probability, but over time you can decide and see from your back testing and your forward testing to see what the rules are, and hence why using a trading journal would be key to help you to understand what works. For example, 1 hour, 4 hour in favor, daily is not, but they work out and the trade works. 1 hour, 4 hours not in favor, but the daily is in favor and the trade doesn't work, then you already know the answer, right? Don't trade just on a daily. Make sure 1 and 4 hours is more important, because that has a higher probability for the setup. Make sense? So great content, brilliant idea for the Q&A. So often get held back on simple questions. Been trying to learn since 2021 May. Still not confident in trading, and hope you'll change my life. Thanks for so far. Jokes aside, you know, a very important factor is the Coin Bureau trading. We are literally giving you these strategies and this information for free. This has taken me 4 to 8 years to get to this point. All of this information cost me hundreds of thousands of dollars of failing, hundreds of thousands of dollars of courses, joining some scams, joining some mentors. And here's the thing, I've joined some mentors who are really good at trading, but I just couldn't resonate with their style. That's just how it is, right? Like, you can't, I don't blame them for that. I just found that it didn't work for me. But you try and you create that recipe and find what works for you. So here we are really honestly and truly trying to help you guys and share with that. SR flips and key zones are a solid indicator and more recent. I've been trialing this and testing the buy and low zones, measured by the volatility and confluences, and so far it's working out great. Do you have a different trading tool when it comes to the lower time frames, such as 5, 15 and 30 by Auth? Now, no, I don't, because when it comes to 5, 15 and 30, the time frame is so short that price can flip just at a switch, just like that, and they are nowhere near as relevant. And the beauty of it is, on the lower time frame, we wait to hit these higher time frame key zones, and that has a higher probability. And if there is nothing in between, we are patient and we wait. That is the biggest thing about trading, being patient and waiting. That's it. You can't force a trade. Not trading is trading. Capital preservation is trading. Saving your money and keeping risk at hand is trading. Just because you're not in a trade doesn't mean you're not trading. Essentially, there's a fine line between trading and gambling. Complex strategies shared in a simple and understandable way. Nice, 100. And that is by Jim Payne. Thank you, pal. And that is the end of those Q&As, and we're going to finish on that. I hope you guys enjoyed all the simple explanations so far. If you've got more questions or I haven't answered yours or may have missed it out, drop it in this video here as a reference point. I'll go through most of them. I'll reply to every single one of you, but in terms of the ones I'll do a video over, I'll be picking the ones that, number 1, is being asked the most, number 2, I believe is going to help you guys the most and benefit you guys the most, and then last but not least, either they're just funny or I just want to reply to it. So I hope you guys enjoyed the video. Thanks for watching. Remember to like, share, and subscribe. Check out the links in the description below to support us if you want to use them. And like I said, we'll be doing the $5,000 challenge on Bybit. I've loaded it up now and we'll be taking it slowly and seeing what we can turn this into over the next 2 years. Now, just to mention this, don't have an expectation that I'm going to turn $5,000 into $100,000 in like 2-3 days. That is not it. It's about slow compounding. If I happen to make $5,000 into $100,000 in maybe 2 years, 3 years, that's still 50k per year, but slow compound wins are the way to go. And look, none of this is just for you to go and go balls deep or go and take this. I am wrong many times, I'm right many times, but what is more important is, like I said at the start of the video, I'm consistent, I'm profitable, I'm disciplined, and I don't get swayed by other people's opinion because I know what works for me, and it's my bank account and my money that I'm trying to grow. So no one else can affect that other than myself. So I hope that works out for you and you are on the same path in the journey. Excited to share this with you guys. Thank you for all the positive comments so far, and you know, it's been really well received, so I appreciate you guys and I hope that we can add some value, and I'm looking forward to hearing your stories when we meet one day. Peace.